Yay. And here is Steve. Steve made this link here. Let me go ahead and pop them there. And then we'll go ahead and get started because we're streaming. Let me open up with prayer. Hey guys, all you guys on YouTube, nice to see you here. Welcome to the $50,000 to $50,000 challenge. My name is Dr. Greg McLeod. I'm a former Wall Street currency analyst for 30 years of experience. And I created this unique challenge to help people trade the markets and take a small account to build a large account. You know, the Bible says that when you're faithful with little, you'll be given much, but that's actually a method of approaching the markets. When we're starting with $50 and using this proprietary spreadsheet that shows position sizing and money management, we were able to scale accounts from 50 to 15,000 and beyond. And so I'm giving you a little bit of unlike other challenges, which have all kinds of rules. You're trading alone and you're trading a demo account. You're trading a live account with $50, and we're actually scaling that. But we're a faith-based organization, so always start with prayer. So let's bow our heads. Heavenly Father, we just thank you for this day, for this is the day that you have made. We will rejoice and be glad in it. We thank you for giving us wisdom and understanding. Bless everyone under the sound of my voice, watching on YouTube or watching the recording. Let their minds be opened up to trading opportunities, to find winning trades so we can make money to support the gospel and to spread the word of Jesus Christ. And we just thank you, Father God, for opening our eyes and giving us clear vision and giving us the right spirit and guide our steps in Jesus' name. Amen. All right, guys, ring the bell on that one. Hey. Okay. All right, we're going to get started in the markets. And we got a new trading tool from Professor Steve Allen here. I'm going to share our screen here. I'm going to share my screen. We'll share some audio, and we'll get we're using. This is TradingView. TradingView is a charting package which we use. We trade with MT4 or MT5 or C-Trader. You can trade with any brokerage platform, but the brokerage platforms are really meant for you just to place trades. Okay, they're not really. They kind of lack in the charting and giving you the big visual, big picture and the charts that you normally would need in order to make some really fine or careful analysis. So I use TradingView. And in TradingView, it's also, you can trade with TradingView. It also has customizable indicators programmed in PineScript. And students like Steve can make their own programs, make their own indicators. So he's created this one called the Momentum Engine, and you can look it up. If you have a TradingView account, you can go to TradingView, go to indicators, and click Momentum Engine, and you'll get there. I also put a link in the chat box where you can actually find it. Let me pop it in there really fast. There, okay. You click that link, it'll take you right to it. And it's real simple. It's like strategy. Red in a downtrend, green is uptrend, and it uses momentum, right? So that's that's a special bonus out there for you guys to be able to actually use this, right? We're actually going to use it in trading in another couple of minutes. But before we go through a special checklist, and if you send me a message, I'll give you the checklist. But what we want to do is analyze. We want to treat the market as a patient, and we are the doctor. And we want to really take the pulse of the market. You know how the doctor will take your blood pressure. You know, I got my blood pressure monitor. You know, maybe listen to your heart, look at your eyes, look in your throat. You know, being able to do these things so we can write a diagnosis, whether we're going to buy or we're going to sell. We're going to write a prescription that's going to make us some money. If you misdiagnose the patient, though, and you kill the patient, you have a problem, right? So what I like starting with my market heat map. It's an arrangement of currency pairs with percentage change. It tells us what's hopping, what's popping, what's dropping, what's not in the market. And it's one of the first indicators that I had programmed back in 2014. And it's real simple. Green's an uptrend, red's in a downtrend, gray stay away. It's my top secret tool. It's the trader's best friend. You can get access to it for $19.99. But if you're on a budget, just go to the website mymarketheatmap.com, and you can get access to a very powerful heat map for the major currency pairs. Oh, I'm trying to send you a link there.
Doc, I'm not seeing your screen. Are you sharing?
Sharing? Yeah, I am. I'll try sharing again. Share entire screen, heat map, share. Can you see now?
There it is. Thanks for
Okay.
that.
Good. Okay. I might share this other screen. Was it black?
Yeah, it was black.
Okay. That's this screen over here. I was sharing the wrong screen. Okay. So my market heat map does what's happening, what's popping, what's dropping, what's not. And I guess you didn't even see the indicator that you had made, right? I was talking about it, right? But there it is, there, the momentum engine. But anyway, going back, backtracking. Let's take a look at my market heat map there. Go to mymarketheatmap.com, and then you can scroll to the front, and there are a couple of tools that you can use absolutely free. The first one we're going to look at is the heat map itself, and we can see that the euro is in green, and it's up 0.2%. The opening price, the low, the high, and the number of pips that's made so far, made about 2 pips, right? And then the others are gray, which means they're moving sideways in a channel, and they haven't really moved that much, right? The threshold is 0.2%. So once price breaks out 0.2%, it changes color green. If it breaks out below negative 0.2%, it's red, and it's trending down. So we can see two extremes, nice orderly market. The euro is in the top spot. Dollar Swiss, the dollar is getting spanked. And we did have news that there's Middle East peace, that Iran and the United States are going to sign a peace agreement on Friday. And so the dollar is selling off, and people are maybe looking to buy some risk assets, right? The next tool we want to use is so we would look for buy opportunities in the euro, right? The next thing we want to use is the economic calendar. You get to use that for free, actually. And here it's very important. I call it fund with flags. You're fund with flags. This is fund with flags, which we have the flags, and this is Australia. Oh, we have a rate decision. It came out already, okay? And Australia, they kept the rates unchanged at 4.35%. And so that's usually positive for the currency, and the Aussie should be trending higher, right? And I usually filter to just the high, the red guys, because those create the most momentum, right? Usually when these announcements come out, they move the currencies the farthest. So today's Tuesday. We have balance of trade from Japan. That comes out in 33 minutes. So the Japanese yen, the dollar yen, or the pound yen might be in effect, might be moving in about 33 minutes. And we can check it out, especially those would be worse than expected. So that should be bad for the currency. And then we have a lot of UK data coming up on Wednesday morning. And so that would be very, depending on what it is, could be very positive or negative for the currency. And we see that's the UK flag, which means that, we would look at pound dollar, pound Swiss, pound yen, euro pound. Anything with a pound will probably be moving around that time. And so we wouldn't look at like Canada versus Turkish lira or something like that, or the peso versus the Australian dollar. Well, why am I'm trading this, but it doesn't stop moving? Well, it's not moving because the flag doesn't match, right? So you just want to match the flag with what you're trading, and that usually gives you an added benefit, or that you're going to be in something that's going to move. Okay, so we've checked the calendar, and we've checked the heat map. A couple of other things that we can check as well. I like going to CNBC and checking out their any big headlines in the paper, anything. So Fed Chair Warsh expected to withhold dot from central bank's interest rate outlook. Okay, so he's a very powerful guy. He is in charge of the interest rates of the United States now. Jerome Powell resigned or quit or something. So this is the new guy. And so he's a very important guy to watch if he says something that could impact the markets. Because I think we do have I think we have an interest rate announcement this week, either tomorrow or the next day. Let me go back to my market heat map, and let's go back to the calendar. And Fed interest rate decision, 18 hours. So that's going to be tomorrow. And so it'll be very interesting. We currently have interest rates at 3.75. It's widely expected for them to keep rates unchanged. Interest rates are the biggest movers of currencies. So if we see them hike interest rates, it could suit the dollar, make the dollar worth more, because you would put your money in a bank with higher interest rates, right? But what if they cut interest rates? Well, that could make the dollar weaker, right? Which is good for if you want to refinance your house, or you want to buy a car, or if you have credit cards. Cutting interest rates is actually good for the economy. But if we're trading a currency, higher interest rates make the currency go up. So, okay, so Powell's term ended, still on the board of governors. All right, but hopefully he doesn't. Hopefully he has nothing to say, because I know him and Trump had it out. He wouldn't cut interest rates. Anyway, so here we go. So I checked the headlines, but let's look at the overnight market. Overnight for us, because this is morning. In Asia, it's morning, right? And so so we look at the overnight markets. What happened last night? Well, man, the stock market got crushed. 1.15%. NASDAQ down 1%. NASDAQ down a little over 1.75%. S&P 500 down 0.5%. The only one that made it was Dow Jones Industrial Average was up 0.2%, and with the Russell 2000 down. But let's take a look at the VIX. The VIX is the fear index, the volatility, and they took it off the display. And the VIX was at 30. It was at 30 during the height of the war. This is the fear index, and the fear index has come down. Really, we want to check the VIX, because we want to know how fearful is the market. Is our patient fearful? If they're fearful, then they're probably going to run to the dollar, run to the Japanese yen, they'll run to the Swiss franc for safety. But if the fear is down, well, then this is more of a risk-on market, where they're more liable to buy higher yielding stocks, riskier stocks, higher yielding currencies, and they'll sell the dollar, sell the Swiss franc, and sell the yen. Okay, so that's how that usually works, is yin and yang. Another thing we'd like to take a look at is the inside of my marquee map. There's other things, such as some trader tools, I like looking at sentiment. Sentiment is right here. Sentiment tells us how many people are on each side of the trade, right? But unlike a beauty contest or an election where the majority wins, if the majority is on one side of the trade, it usually means that it's bad, right? Or bad for that particular thing. So we went to currencies and we look for, 72% of the people are long pound and 28% are short, right? Which is kind of interesting, which is kind of the, that really, would be bearish for the pound, right? The euro is about evenly matched, 58.2 versus 41.76. So you want to see a big discrepancy of 2-to-1, and that usually is a pretty good trade. But all these are pretty much. There's another one, FX. No, okay. I need to go to. I have a tab. I have it organized under these tabs, right? Trade analysis. There we go. And the trade analysis we have here, right? Market sentiment, FinLogic, right? And we can see how are people balanced. Aussie CAD, really strong. Buy Aussie dollar too. There are more people. If everybody's short, you think, oh, everyone's short, let's sell it. No, you do the opposite. If everybody's selling, you're buying. If everyone's buying, you're selling, right? So you'll see anything with a lot of sells is a strong buy. Anything with a lot of strong buys is a sell, right? So these are interesting to look at. These are things that we can put in our basket to possibly take a look at. Aussie yen, pound yen, euro yen are all look long. If they have a lot of short interest, a lot of people are interested in selling. 93%, 91%. Okay, so those are some things we can take a look at. The other thing I like looking at is our trend navigator, which we have. And currently I'm looking at the top one is the euro. And so we have a bullish on 4 of 9 dials. Dials are based on the strength of the trend with the compass. If it's straight up with a green at north, it's very bullish. We're bullish on the 15-minute, 5-minute, and 1 hour, and the 4 hour. Those are good ones to be. And we have a strong buy recommendation from Nemo. Nemo, like Captain Nemo, he's our captain's tactical advisor. He's our AI. And it says that we have an uptrend with an 83% confidence for scalpers, a 71% for trend for day traders as a scalper. If we got long at 13, we've got take profits at 116.21, 116.35, and 116.28, right? So that's one level that we can look at too. We also have a new tool for people who sign up for the challenge for July. We have our FX, our 50 to 50,000 31 trade blueprint dashboard, where you put your balance in. They'll take the number of trades, your next profit target, your position size, and shows you where you are, your actual balance versus the challenge. And then you can either manually log in your trades to keep track of it, the recent activity or trading analysis, or you can go to MyFX book and connect it. There's directions to how to do that for an auto import to automatically import your trade data, right? This is a good way of keeping track of the master dashboard. You have access to it as long as you're part of the challenge, but that starts in July. So you'll get a sign in for this, and this can keep you on track to see where you are. It'll tell you exactly what size position you should trade and the profit target that you're looking for based on your balance. And so it keeps you on, it's kind of like a trade diary. Okay. So the other tool we have is Trend Spotter. And I love Trend Spotter. If it's there, it's Trend Navigator. Another Trend Navigator? Okay. Let's go Trend. And we're actually going to analyze the trend of each currency. You know, each currency trades individually, right? Really? Time's expired? No. Do you know who I am? New Year's Surfer. Okay. Create an account, log in. Oh, I'll just log in. Log in. No. Where's the other one? There we go. Oh, okay. I have to. All right. Start free trial. Create an account. All right. Okay. Okay. We'll skip that for now. We'll come back. Well, let's go to actually go to the charts. And we're going to go to. Okay, so we got that one there. Let's go to the chart. Actually, go to add to favorites. This is Steve. Steve created this. So proud of Steve. 77 years.
Doc, it seems to work best on the 5-minute, but it can be used on any time. And I personally get rid of the 2 flags at the end of the. You can do that in the style section because it's kind of obscures the price at that point.
Oh, the little tags there.
Yeah, you can get rid of those.
But okay. Look.
You see on the side there at the bottom and top, there's 2 meters, and those kind of give you extra information on whether it's a bull movement or bear.
Well, it's definitely with a bullish. We have a breakout from our opening range breakout indicator. In fact, let me start with that first for those people who are brand new. Let me remove all the drawings here, and we actually have. Oh, we're gonna use this one, Samurai Sword. Okay, so the Samurai Sword is in TradingView, and you can also download it for MT4. And it basically looks at the first 30 minutes of the time, the first 30 minutes before the opening. And the opening here is 5 p.m. for Sydney, right? 5 p.m. our time, right? So 30 minutes before that, we take the high and the low for 30 minutes. So the high we have at 160.069. The bottom we have like 160.06. So it's like basically a 3-pip range, right? And we notice that when price breaks out of the range, it really takes off like it just did, right? So actually, we should be in this trade. We did a lot of pre-work, right? So it's kind of run away. Let's see if there's anything else that hasn't run away yet. Okay, well, pound's already running away. Aussie dollar running away too. Dollar cash been breaking lower. It broke and did something crazy in there. So we did. And how about New Zealand dollar? New Zealand dollar is just breaking out. I'm going to go ahead and get long Kiwi dollar, right? Get long at 0.5834. Stop loss. I'm going to move the stop loss underneath the opening range breakout. So we're going to risk about $5, and we'll see if we can make like maybe $10 or $15, right? We want to try to get 2 to 3 times what our risk is, right? So this is the amount that we're at risk. We're risking this much to make this much, right? And I'm actually, I got short oil. No, that's not good. Oh, is the market open? Oh, okay. That's not. It hasn't broken out yet. But this one it's screaming to the north side, right? And I actually would look left and look at this old high right here, and say, well, that probably where this wants to go, right? Look left for your targets. So I'll go ahead and put a horizontal line right there, and then look at. So if I were long, right? So let's say if I got long, right, and I would put a stop loss below the low here at. So risk like, let's say I risk like $3 to make like $5, right? That's how I would look at. If you were actually using the measurement objective, the height of the box usually gives you an indication of a possible target, and usually we go 2 or 3 times the box. So 1, right, 2, maybe 3 times the box, right, 3x the box, which is not too shabby a deal there. Now this is Sydney. There's also another one that I like is Tokyo, which should be open maybe in an hour or so. So there's a Tokyo one too. Okay, let me open Tokyo. Okay, and this Tokyo SW one actually, okay, so that's it. Okay, so it's already open. Tokyo is already open, and so we would be, so I can actually put my stop on the other side of the range box, risking $4, and still look to forward to make 2. There's also quarter lines, and that's another way of looking for price targets. Numbers ending in 25, 50, and 75 quarters, right? You know, guys, United States money, we have 25-cent piece called a quarter, right? 25 cents is a quarter. And then we have, and 2 quarters is 50 cents. Not the wrapper, 50 cent, right? Oh, it's your birthday. Oh, there we go, 50. So there's go. And then there's 75. That's 3 quarters. 3 quarters of a dollar, right? Right. So 75. And then after 25 cents there, whole number, round number was 00. So that would take us to 117. 25 pips. So these are 25 pip increments called quarter lines. And sometimes what price will do, it will move to the next quarter line, right? The quarter line before us was the 0-0 quarter line, which we didn't hit, right? Hopefully it won't hit. And so 0-0, if price stays above this, and we expect price to trend and continue to step up, and now we're retesting the top of the box. So we're pulling back there. So we actually could get a better entry if I got in here at the top, right? So we're pulling back, right? So others might have pulled back as well. Pound dollar pulling back, Kiwi dollar, right? And notice because they have dollar in their back, right? When it's going up, when these currencies are going up, the Kiwi dollar is strong against the US dollar. The US dollar is weakening against the Kiwi dollar. And the moving averages, we have a green moving average, which Svetlana included in her original doing of the Samurai system. She uses as a filter. The green moving average is the 50, and the yellow moving average is the 200. When the shorter moving average crosses above the longer term moving average, it usually indicates that we're in a bull trend. And before, when the yellow moving average, the 200, was above the 50, we were in a downtrend, right? Now, the thing about something like this is it lags. So price dropped and dropped and dropped. Moving averages are above each other, right? And then price turns around and it's heading up, but the moving averages haven't crossed yet, right? So the moving average crossover, the buy signal is here, right? Which is late because moving averages lag. And within this uptrend, we have pullbacks, right? Prices returning back to the trend line. Trend line, like in geometry, is usually it takes 2 points to make a line. So we take the two. So actually we're breaking the trend line now, which is bearish. And you see the moving averages haven't crossed over to create a bear trend, right? So we would just wait. Either our stop is hit or we keep going up to our price target, right? Now, if you haven't entered into any trade and price is broken out from this, we call this a break and retest, where price broke north and broke out and then came back to retest the actual breakout box, right? This happens to be the Tokyo one. And we are breaking and retesting. It has historical data on. You can see like in previous days where we actually had a break, or it broke out and then dropped. Right, that happened yesterday, right? And here we have a breakout, and we are pulling back pretty hard there, right? And I've noticed that these corrective moves have been fairly severe. And when they break out, they pull back hard. They break out, pulling back with big stacking candles. Here is the euro, and now we're actually breaking back in the range. The other filter, but you can still see that the moving averages are still, the 50 is above the 200. And if we connect these two swing points here, we connect those points and then extend those up. Well, our trend line, we're still above the trend line formed by these two circles here, right? These 2 points formed a trend line, right? But if we made another line and connected these lows here, we broke that line, right? Which is a more aggressive line with a steeper angle, right? And so we'll see if price comes back to this dotted line where there was a low here. Sometimes price will stop at a certain area and bounce from that. We can also take Fibonacci lines, basically take the entire move and breaks it into different levels. So if we have a trend move, we can start at the low, connect the high, kind of like old Drake song from the bottom to the top, and now we're here, right? And then it breaks it into these different levels, 38% retracement, the 23% retracement, the 618, the 50% retracement, right? So how far from the high does it retrace? Right now, it's about 23%, 0.236. But what happens is these levels, sometimes they act like magic, where a price gets to a level and actually bounces from that. The 38 is right here, the red level. I made it red so it stands out because typically price will bounce off of 38 and turn around. If it turns around before it gets there, it really indicates that traders are really interested in the currency and they're excited about it. So we can see there's a little buying going on there. And then our last indicator that we have on our chart is the stochastics indicator. The stochastics indicator tells us if we're overbought or oversold. And when we get oversold, it's down here. It means that it's, at pretty cheap price, right? It's usually in an uptrend, this is a buy zone. And but when it gets up here, it usually means for you to take your profits, right? So if we got in here and the stochastics got there, we could have taken profits there. But in an uptrend, we expect prices to make higher highs and higher lows. And so this can remain oversold or overbought for a really long time, right? It could twist around above 80, showing that it's overbought. And it could keep making new highs. So it's not a rigid, it's a banded oscillator, but it don't, in fact, this going down below 25, it's oversold, but it can keep going lower and lower and lower. Price can continue to go lower, right? So we just kind of, but usually when it loops down, it gives us these buy signals, or it confirms the breakout. If we broke out of the range, it confirms the ranges that people are interested in it. They're in, right? So we can see that where price turned right there, right? Then we could take a trend line across and make a bull flag pattern. So we have a flag pull back against the trend, price breaks, pulls back, another flag against the trend. And usually these stochastics line up on those areas, right? Stochastics is based on moving averages, so it's going to be late. So even though price is going up, this hasn't crossed above 25 to give us a buy signal yet, really. Right. But now it looks like it's trying to come back alive. We have a trend line break, a color change in candles. not out of the box yet. So we want to see get out of the box and back on its way to profitability. Any questions? Okay, while we're doing that, let me see. Okay, we were doing simulation, Steve. If you the recording was pretty good because the young guys are asking me how to stack trades. We stacked a bunch of them here, and it was pretty wild, right? We stacked all these trades on the breakout because we were following the symmetry on the other side. It was amazing, right? But let me show you, if you're using MT4, how to actually set up your trading platform, right? So this is MT4. You want chart. Let's say you want the euro. You click EUR USD, right? And I'm going to close these. These are right. So you have a full chart, right? You want to, and let's see how to do. I'm going to indicator list and edit. Oh, what's going on here? Right? Control A. Oh, what's that? I'm just going to delete everything. No, I want to delete. I'm just going to clean it up. Right. All right. We're just going to get rid of them. Okay. All right. So this is the chart that you're starting with, and you want to install the indicator, right? So what you want to do is go to you want to go to the school community, right? And you can go over to Classroom, $50,000 to $50,000 challenge, and then you would go to start here, resources. You want to download the compounding blueprint, but you also want to get the indicators, and they are located. Challenge, trading rules, platform setup. Oh yeah, platform. We go to broker and platform setup. Right, there's a video here you can watch and how to set it up with the Samurai Sword. The broker, there's some brokers you can choose. If you're in the Americas, you can choose Ox or Trade Smart or CoinX. If you're international, you can use Trader's Way. Trading View, if you don't have Trading View, you can get here, get a $15 coupon if you use this link here. And if you want to get the Samurai Sword indicator for Trading View, message me with your Trading View username, and I'll take care of you. But here is your Samurai Sword indicator for MT4, right? So you want to download that. You click that. Click download. And then I'll put it in the, I'll put it in here, right? Right. So there it is, right? Okay. I already have it, so I'm just going to cancel it, right? So I already have it. Now I go to where I have it saved. No, right? So that's the file. I'm going to right-click it and copy it. Then I'm going to go to File, and I'm going to go to Open Data Folder. Then I'm going to go to MQL4. Then we're going to go to Indicators. Then we're going to go out in space somewhere, right-click, and paste. I already have it, so I'm just going to skip it, right? Then what you got to do, you have to close up the platform and then open it back again. And then what you're going to do is you You can locate it in your list of indicators under custom. You click the little star in the folder to get the navigator. Scroll down, and it's in alphabetical order. I got a lot of indicators here, and I renamed it, so it's all the samurai sword breakout. So you drag that over there like that. The times are set for London, right? But you can set them for Asia, and she shows you how to do that. You go up here, 2:30, 3, and 11. All right, for these are not. This is MT4 time, which is not our time. So you have to use 2:30, and I know this one was 11. And this is going to be 3 o'clock. Click OK. And there we go. We're going to set the time frame to 5 minutes. And there we are. We're inside this box right here. Right? Then we can add our next indicator. We're going to add our stochastics indicator. We go to stochastics. And 1433 is the settings. Click OK. And there's our stochastics. We want to add the 2 moving averages. We can go to, we can actually go to insert, indicators, trend, moving average. And you can put the 50 on there and then do that again. Insert, indicators, tool, trend, moving average. Add the 200, make that maybe yellow, whatever color suits you, right? And so now you have the setup for and it's historical, so it goes back. You can see where we have the others, right? So this is the MT4 version of the samurai sword, right? And what you can do is I've created templates. So what you can do is, if you go back here, there is a Tokyo session, and there's a New York session, right? Well, right now we need to save it with the Tokyo session already. If you want the New York session or the London, where's the London session? Okay. All right. I don't have the London session's not here. Okay. It must have dropped off. But you can create using the times, you can create another, you download the template, right? And then I'm going to drop it there. I'm going to copy the template, do the same thing I did before, right? What's going on here? Okay. It's from tester. Template. So you go to right click, template, and then actually you're going to go file, open data folder, and then you go to templates. You're going to copy and paste that template in here. I've already done it. So you just right click and paste, right? Then close it up. Then right click the chart, go to template, and then find the, you find the maybe let's say London. You want the London ORB, right? So the Samurai Sword London session, click that, open, and there it is. There's London, right? So I created a template for each session. So when you go to another session, all you have to do is, instead of doing all this all over again, all you have to do is right click the chart, go to template, and you can load the Tokyo one, this type, Tokyo, right? Samurai Sword Tokyo ORB, right? And do the same thing. Okay. So, and Krista, when we finish, just stay online, and I will go into your platform, get you going. All right. So a little refresher there. Okay. Well, our trend line break, that's what this thing does. I noticed that these big corrections are like A, B, see you later, all the way back down, right? Or back. Oh, that hasn't stopped me out yet because I might stop outside the box, right? But hopefully this thing gets some, we get some traction. Yeah, the ORB strategy has been around for a number of years. In fact, the famous turtle traders used it. They call it the turtle breakout strategy, but a lot of stuff gets around the turtles. Mark Douglas, not Mark Douglas, but Fisher. He was the largest oil trader, and he traded oil futures. Okay. And let's go ahead and get on. So, Toby Crable wrote a book on the opening range breakout. That book is like $1,500 online. Or actually $1,100. Okay, I was off. Day trading with short-term price barriers and opening range breakout. Toby Crable, $1,100. This is a 1990 book. I actually have a copy of it. Oh, we have must be the Japanese data came out. 378.7 billion, higher than the forecast, but lower than the previous number. Let's check out anything happening with the dollar yen. Easy, everything's going great. Let me go ahead and close this group here. All right. Let's go ahead and go back to our. See what dollar yen's doing. Ooh. Got it. It looks like it's surging. The the 200 is above the 50, but it looks like it's getting ready to cross over. But look at that drop. That vertical drop is huge. So it's probably a gap. It's probably going to be. We look at filling the gap. There's a gap. From here to here, right? So once the price breaks out, we should fill that gap up to that 160.47 area. Right, let's get on the 5-minute chart. Usually when dollar yen is going up, euro dollar, Kiwi dollar, Aussie dollar going down. Are you guys in anything? If you see something, say something. We're a trading community. We've got what? Oh, I think I was stopped out. I heard something. Heard a nasty little sound there. Yeah, dropped right back in and hit my stop. Boo. Okay. Not ready yet. The dollar index. Let's take a look at the DXY. And the DXY I mean, did a big drop during the lunch break in New York, and then mounts and moving sideways, but sideways and up though. But still, we have a downtrend line that's coming in too, so it's in a triangle, the triangle of indecision. It may be early yet, like Steve has found out that we got that little time. What was that time, Steve? Between what, 11? Our time was what time? 11 our time?
It was New York time between 2:30 and 3 a.m.
Okay.
I just gave it in New York time because we got
Right.
different times.
Mm-hmm. Exactly. Right. Mm-hmm. It says Japan exports in May grow at fastest pace in more than 3 years, beating estimates. And it's really interesting to see good Japanese news, but then you have the dollar yen, actually the yen being sold off. Pound yen, well, not really. It's kind of like stuck in the range, right? And you really can tell, a lot of times we're in trades, we go, oh, maybe I'm not a good trader or whatever. No, it can be timing, because if you're in a market like this, there's really nothing you can do until it breaks out, right? The market is accumulating, and especially if the percent change 0.05, 0.001, this is kind of like, hey, you know what? Maybe we should just go take a nap and wake up with Steve. Steve, you gonna be trading tonight? Because if you are,
Oh yeah, I'm going to, because I've been having some good trading at the London session.
Nice.
Fits my circadian rhythm.
You're kidding. That's good. Very few people it fits, right?
Right on.
Yeah.
But yeah, I'm getting some strong momentum to the downside on the Euro US. I don't know if it'll sustain, but
I can't even. Oh 09, yeah, it's yeah. I mean, we were looking. It was looking pretty positive. I mean, we'll see what Trend Navigator says right now. Warning: choppy conditions ahead. Bearish bias. It says it's neutral right now at 17%.
yeah, it could go either way, I guess.
Yeah, but if it closed outside that box, that would be our. Somebody, what do you got over here though?
It's also below the 20.
Yeah, below the 20. Yeah. Bear score 3, bull score 0.
Yeah, and you can see on those vertical bars, when the brighter the color, the more potent the momentum in that direction is.
Mm-hmm.
When the colors start getting darker, the momentum's weakening.
Okay. Oh, it's like a great gradient. Because you can see that when we're making new highs, momentum was good, but then it started trickling off. That's almost like
well, right there in the peak too, you can see you started to get into a darker green area.
Mm-hmm.
And so that means you better keep your eye out, because its momentum may change. And sure enough, it did.
Yeah. Yeah. It is, this is, I mean, we got this big push right here. And then the pullback usually is our wave 4 correction, but this is like a really, because wave 2 was so simple, the rule of alteration. I know that, right, we've took the wave counting class, right?
Yep.
And well, look, this is a 1-2. That's simple. So rule of alteration, we have if we have a simple 2, we have a super complex 4, right? And the super complex 4, I mean, we don't even have the 5 has not even, that's why I was anticipating that we would get up here to that 19 area, or even roll into the 25 area. But we could dip down and make another complex move, right? Or this is I don't know, 1 choppy 2, a 2 that subdivides into 5 ways. Those complex zigzags in the Elliott wave theory, which I said to avoid, I think this is what this is.
Yeah, on my 1 minute chart, it's moving back up. The Euro and US.
See, remember that? Because I said, stay away from any of this stuff. XYZ, he's got a whole. Because usually, if it's like this, there's no volume in the market, right? Usually we go from a 3 to a 4, a simple 4 or 3 ways, and then to shoot back out. This is like, whoa. I don't think I've. I think when the market gets like this, I either find something else to trade, or I might have stopped trading. Because I don't think I've even. This is definitely a cycle like this. Where you have 3, 4, 5 like that, and then just like corrects down like that. This is a very different, like this walking 5, just extremely janky, right? It's like there's not a lot of commitment to the direction. I think it's until we have a signed agreement and maybe some nuclear material being excavated, and things are normalized. I think everything is going to be a little on the skittish side. Oh, let's try gold, which is sometimes. So here is, and what do you have on there? You have a bull score of 2, a bear score of 0. And we have not broken out. But if we do, I would look at this old high as a target for 43.54. A nice overbought. And I look at the 30-minute chart too. Ooh, that 30 minutes is ugly. It's like, yeah, let's do this thing. Oh no. Silver. See, it tries to make it to the old high, and it just doesn't do it, right? It doesn't exceed it, and people are like bailing out. They're getting their parachutes before, they know the plane's going down, so they're sitting with their parachutes. But let's look at the dollar CAD. Or let's look at the dollar CAD, because dollar CAD is sneaky. Sometimes it wants to sneak outside of the box. But you can see that it snuck out. But look at that small body candle there. You have a bull score of 2, bear score of 0. I like that. But see that red? That's usually and these are Heikin-Ashi candles. When you have this small body indecision, in Japanese called a harami, it's like a mommy with a baby in the front. Usually this is a reversal pattern, right? Now, that'll be very interesting to program a trading strategy which looked at haramis as reversals, right? Anytime you get a big trend in a small body candle, and make that a sell signal, and let's see, watch the next candle. If it breaks the low, 139.95, see if that comes back down, right? But there's the year. But look at that. See, tweezer bottoms. I don't see. These are tweezer bottoms, the 2 long wicks. This was a full body red candle, and buyer stepped in. And then it was a full body red candle, and then buyer stepped in, pushing price up, making it a wick, right? So it looked like this, right? Then the bears are high-fiving each other. Yeah, we're going to buy some more honey and more cave and more berries. And then, smackdown. Oh, what happened? We lost everything. Oh, we got our cave repossessed. Now we got to sleep in the forest. No more picnic baskets. Hey, Boo Boo Bear. Hey, we're going to be rich. Bam! Oh, double smackdown, right? Smack up. Smacked it up so far that it just left the wick. This was the same way. Big green candle, smacked down, right? This is a full body green candle. Who's got the paint? Oh, okay. Green. Look at the Irish. And then bam, smackdown, right? So that was the highest high. This is the current close, right? When you have a candle with no wick and it stacks into another candle, clone, bring in the clones, and then you start stacking green candles like that with no top wick, that's extremely bullish, right? Bring in the clones. Send in the clones. Right? I think it's kind of racist. They call this 3 white soldiers. I go, well, yeah? Well, where are the 3 black soldiers? No, they call it 3 black crows. Japanese candlesticks. They're inherently racist. Yeah, Greg, you're making that up. No. I got to show you. Go.
Hey, gold is moving north.
All right. Woohoo. Let's take a look. Oh, yeah. They're the 3 white soldiers. He told you. Anyway, gold. Oh, God, breakout. Breakout. Got long at 4,339. Put a stop below the low this time. Risk $11 to make $20. Breakout. Moving up the compounding spreadsheet. Let's do this thing. The euro's breaking out too. Did we close? My imaginary, just my imagination once again. Playing. There we go. Remove. All right. So we have a break. We haven't closed outside, but it did peak out, right? So we want a closed candle. We get closed candle every 5 minutes, right? So it's 8:11, the 8 o'clock money train, right? Whoop whoop! All aboard. We got the money train.
All aboard! All aboard!
Let's go.
Bye, bye, bye!
Okay. We don't have a closed candle yet. Our bulls score? Bulls score 2. Bears score 0. And the lines are turning green. But let's go back to the trend navigator here. Oh, strong buy. Thanks, Mr. Trend Navigator. 4 of 9 dials, 4 time frames, but caution, chop building. Chop building. Those higher time frames are murky. 78% confidence, though. It's only 78% confident. Come on, Nemo. And we do have news to watch, federal funds rate, FOMC economic projections, and press conference, all being warned about it. Thanks, Mr. Trend Navigator. Back there. 5-minute chart. That's 8:13. What's our goal doing? Our goal is again I mean, technically this candle is still in formation, and this one before it didn't close outside of it. And sometimes if you get a really big candle and you're waiting for it to close, you can go to a lower time frame, go down to 1 minute. And, I got it long on this candle, right? With my stop below these last wicks. So let's see if we get, and it's pretty cool because we've got the moving averages are crossing, the 50s crossing above the 200. Our Steve Allen bull score. Score! Ooh, a new candle. And it's scoring. Yeah. So this 5 minute. 5 minutes. Oh, it's 8:15. That's right. 5 minutes. New candle. Our new candle closed outside the box. So this is what a buy entry looks like, a textbook buy entry. We usually want to make sure that the moving averages are lined up in the direction of the trend, which is our 50 above our 200. Our stochastics is crossing and pointing up. We have a closed candle outside the box. So then we enter long, place our stop a couple of pips below the box, and then we look at a couple of ways of making a price target. We can take a measurement objective and measure the top of the box to the bottom of the box, and that's is it $615 or $6.15? Yeah, $6.15, right? So that'll be like $18, right? It's 3 times. So 18 and 336 is 54. Is that where I put it? No. 58, right? Well, there we go. Hey, let's do this thing.
Bye.
Let's go. We're up $1.40. Yeah. Buy a candy bar. Let's check on the euro. Well, we closed outside the box. I'm going to re-enter again. I was stopped out before, but if the reasons to enter a trade still exist after you're stopped out, then re-enter the trade. Okay? Don't cry in your oatmeal and go, oh, hey, work, I lost $5. Oh, well, this system sucks. Greg sucks. I don't like this. No. The reason to get into the trade is this. Price breaks, closes above the box. Moving averages are lined up. Stochastics is lined up. Re-enter the trade. We're so trained in school. Oh, and no, Crystal admit. What? Get an A, right? 90%. No, 90s are not good. You gotta get 100, right? But when you get into life, you make mistakes, right? You've got the best baseball players in the world, and they bat 300, but 300 is 30%. Means that they hit the ball 3 times out of 10, right? And they're Hall of Fame, right? But in school, If you get 5 wrong, it's a D, and it's an F, right? In trading, it's the same way. You might get stopped out, and even though pip and run, we do 90% win rate for stage 1. When you get into live trading, you realize that all you really need is if you could win with 30%, 40%, right? If you keep your risk management, if you're making 3 times what you risk, you can be wrong like 60% of the time and still make money, right? The key is to protect your account. So that's why the compounding spreadsheet is so important, because instead of revenge trading, you say, look, and I'm keeping all the position sizes standard, because I create a spreadsheet to actually show you guys like what we actually do. So I'll keep all the pips the same. I'm back. Coming back. Okay, I'm back. The evil market makers. I was sharing. I was dropping truth bombs, and they dropped a bomb on my internet connection. Oh, look! There we go. Look at that. Stacking, stack it, baby, stack it. You guys still can you hear me? See me? Are we okay? Give me number 1 in the chat box if you can see my screen. Number 2 if you can hear my voice.
Yeah, everything's cool.
Okay. Yeah, I clicked something and then it just froze up, and then my browser, I think I probably have too many tabs open up here. Yeah, make one close. Okay. Oh, I was talking about the spreadsheet. I clicked this. That's what I did. And then clicked community. And here we go. So pips for June. So I just went and put our entries in there, put our tracker in there. So I'll fill that in and post that. And so to keep keep all of the trades in the same units or the same number of pips, I'll just use 10K. Oh. Okay. All right, what's going on here? Okay. And okay. Let's go back to gold. It might be more exciting. No, it's only 88 cents, right? About Aussie dollar. Usually it hasn't. But look at that big, deep correction, and then price snap back inside the box. Like it wanted to run away from home. The cold, cruel world is no good. Let me come back home, hang out for a bit, right? So Australian dollar back in its home. Dollar yen. Oh, dollar yen is kind of reaching out. possibly in that good Japanese data. You know, you got this pullback, double top, 200 simple moving average is acting as support. I don't think, maybe this doesn't have very far to go down before it turns around and goes back up again. In fact, it looks like an ABC pattern. So how about dollar CAD? Dollar CAD is kind of droopy, hasn't broken south to confirm this down move. So we just, why would I take it? Because it hasn't broken below the box. The dollar index, the dollar index is scary. It's kind of funny too. It broke up, tweezer bottom or tweezer tops, rejected, dropped, tweezer bottoms, 2 sets, which means this thing probably will go back up again. Usually when you have these 2 wicks, it's short-term bullish. So we're just kind of playing around. The US dollar index, for some reason, it doesn't like the box. Okay, pound dollar. All right, so this is a good one here. And I set alarms on stochastics. So when I get in an uptrend and I get a bullish stochastics ringing, that usually means I missed that one. That would have been a good one to try and get a long in, right? But that's more that's fancy, fancy schmancy trying to go counter trend to the box, right? But just a simple strategy is, hey, it breaks outside the box, a couple of candles, well then, get long, place your stop loss below the low, and then look for, see, this is interesting too, because you've got this pullback here, and you have this old high back there. I would try to go for the old high, which would give us about $12. So risking 4 to make 12, that's 3 times my money, right? Right? We can take that's our amount, our reward, and our risk. The amount of money we're willing to lose. We're willing to lose $4. We could lose $4. The worst possible thing, we lose $4. Best possible scenario, we make $12.90. If this starts moving up, right, price starts moving up, and I can move this stop up to break even, and actually it'll be a risk-free trade, which is really the primary goal, is try to get this to break even, or break even plus $2 or $3. That way it's a risk-free trade, and then you can actually go and look for other trades. Why? Because your trade is covered, right? It doesn't impact your balance or your equity, because it's already paid for. And so you can open up multiple trades and not increase the risk to your account. And even if you got a $2 or $3 and didn't get to 12, well, it's better than losing 4 or 5 over and over again, right? Half a loaf is better than none. I don't know if you've heard that old saying. Oh, let's go back to the euro. Looks like it's doing this thing. $1.80. Hey now, right? Right. Yeah, see it. I mean, it's too tight. But once this keeps going higher, I can move this stop up. See, I can move it up now, right? So now I'm only risking $1.80, right? But once this gets farther away, I want to be able to move this in the money. Moving my stop in the money. That way, if I get stopped out, I make money. Say, oh, you're stopped out. I know. Isn't it sad? I made money, right? You guys like that? Show me some dollar signs. I haven't heard. Let's see if you guys are still awake. Aussie dollar. Not yet. Nothing. Dollar yen, tweezer bottom, dollar CAD. No. Let's go to our exotics. There's usually some fun going on there. Euro Kiwi, pound Kiwi, pound Aussie. There you go. Thank you. Thank you, Krista. Thank you, Steve. Thank you, Lisa. Cha-ching. Ring the register. All right. These are called cross rates because they don't have the US dollar in them. Euro New Zealand, pound New Zealand, pound Aussie. These are the kind of the oddballs, the cross rates. There's not a lot of volume in them, but what they lack in volume, they make up in speed. They move really fast when they finally get going, right? But they usually go in the opposite direction of the majors. So, like Aussie Kiwi. See, once they get going, they get these zoom runs. But sometimes they're little slow starters. And we can sort these by percentage change, almost like the heat map. In fact, this was our first heat map, was the NetDania. You guys remember NetDania? NetDania was a Java-based charting package that was free online. And we can sort these by percentage change. And so I got the idea to program into tiles from using this list, right? So you can easily see, well, Aussie Swiss is kind of up there. Let's take Aussie Swiss. That's not really doing a whole lot. Kiwi CAD. Well, Kiwi CAD broke out. I don't trade a lot of the euro yen stuck in a Euro CAD had a nice breakout. Aussie CAD, Euro Aussie, Euro Kiwi, CAD yen, pound yen, yen. Right, okay. So there's not a lot of volume in them. They're moving kind of slow today. Euro Swiss. Okay. Euro Swiss looks like it wants to break out. We have the 200 and the above the 50. Stochastics is pointing down. If this little baby gets out of here, right, closes, I'll put an alert right there. I'm going to put an alert, right, click an alert, and then we can check that out, right? Okay, so this is MT4. So let's say we're trading MT4, and I was looking at euro dollar, right? There's a couple of ways you can place a trade on MT4. Like if we had our euro template, load, put the Tokyo template, Tokyo template, okay, right, like that. And didn't extend. It's gonna 5-minute chart. 16th. Oh, the 17th. Okay. Let's try that again. Template mode. I did use the right one, right? Okay. Let me use this one here. Okay. All right. Didn't come through. Right. Anyway, I could a couple of things I can do. I can click buy, right? Probably wouldn't want to buy that much, right? Click buy like that, right? And so it puts a line on the chart with a buy, and I can click it, left click and drag the dot line up for a buy. For my take profit, right? And I can move it back, drag it down for a stop. So this is on for MT4, right? And so that way I have my, then it usually shows up down below. Oh, this is the simulator. Let me turn off the simulator. Oh, terminal. There's a terminal trade. Okay. So that's the trade. Your stop, is your order number, the time, the buy, the size, the symbol, the price, your stop loss is in red, take profit is in green. This particular platform charges a commission. Most forex brokers don't charge a commission. Swap is the interest. If you hold a position after 5 p.m., then it charges a daily interest. So I like trading after 5 p.m. so I don't have to pay it's just if you hold it after like if you have it at 4:59 and you hold it to 5:01, they charge you interest. But any other time after 5 or before 4:59, there's no interest. Okay, so that's how we set it up on there. Normally this box will be over here. All right. Euro Swiss looks like he wants to come out of the box here. Getting a little warm here. Move my fan over. So if we're saying a sell on Euro Swiss, it would look like this. We would go ahead and click sell. And then stop loss, just like I did in the MT4. I'll move my stop maybe above the wick. Maybe risk like $5, and then try to make $10, right? And then hopefully, based on trend and here, bearish score based on Steve's indicator, we have bearish score of 3. It's a bearish, maybe as a more. Since we're going in line with the trend as well. So I'm going to actually show you another chart, a third chart. And our third chart, I'm just going to go out to a higher time frame. Let's go out to a 4-hour. And on this 4-hour chart, I'm actually going to remove the execution marks and buy and sell buttons and the positions and profit and loss. We can use this purely for analysis. And we can see that really this is a longer, the bigger trend is up, right? This is each candle is 4 hours. The bigger trend is up. Well, we did break the trend line here. This line was formed by these two, this low here and this low here, right? So connect the two lows, project into the future, and we have a trend line break, price moving sideways through the trend line, which gives us our bearish bias, right? However, we have the 50 is above the 200, right? So it's bullish based on the moving averages. Bearish because we made a lower low and two lower highs, right? And so so basically what we have is a sideways consolidation. We have a breakout channel within a breakout channel, right? Because price usually, it goes trend up, trend channel, then sideways box, and then a downward, right? Yep. So it always has those types of properties, almost like a bridge, right? That goes up, sideways, drop, right? So, and usually I make this up or sideways, I make it yellow because it's not going up or down, right? So it's kind of neutral, right? And then drops. I make that red. So that's the typical life expectancy of a trend. Trend goes up, trend goes sideways, trend drops. So you kind of like see that in other stuff where price rallies up, moves sideways, and then drops. Or here, went up, moved sideways, and then drop. Or in reverse, drop sideways up, right? Usually there's a change of momentum before there's a change of trend direction, right? You get that sideways, you have a drop, right? You have this huge drop. Sometimes you just get a little bit of sideways action, a little bit of sideways, and then you get a reversal, right? Now, if you get good at pattern recognition, which is all this is pattern recognition, recognizing the patterns, right? And there's little weird things happen, right, with oscillators, right? And it's kind of just this repeats. Remove all drawings, right? So here we are. We're at 8:39. And we can see there is our entry on Euro Swiss. We're up 13 cents. All right. Yeah, we got an alert on our pound dollar alert came up. Crossing 8306. Okay, so we could check that out. So it might run a bit. We can just let it go, right? And once it gets farther enough along, maybe like halfway, we can move our stop down into break even. Let's check on these others. Euro, still 80 cents, still, and 30 cents on the pound dollar. Gold, oh, gold, we have to hold. Hopefully it won't turn to mold. It's a good investment by what I'm told. Aussie dollar. And Aussie got a little breakout. When did that happen? This thing snuck out of the box, hanging around there. What's the box top is 67, and we're at 69. So we're 2 pips above the box. So that's an entry, right? So I get long. Oh, what's this? Oh, I switched everything. Yeah. Okay. Settings. One-click trading. Execution. No. Positions and orders. Okay. There we go. Bye. So we got long at 0.7069. We're long at 0.7069. Placing a stop loss. The low is 7065. I'll make it even $5, right? Or risk $5, right? Risk 5, maybe make. Let's look what the previous high was. Our previous high was 70, 79. We can expect. I use old highs as targets, and maybe back it off the wick a little bit, and then take my take profit. Just take it up there, right? So that makes us about $10. 5 to make 10. Not bad, right? Risking 5 to make 10. I just kind of like let these go. They're either going to hit their stop and get stopped out, or you get you hit your profit target. You might need to hit a couple of those if you don't get to $20. Like some of these, you have to hit 20 pips on some of these based on your position size. You might have to if your position sizes are changing, well, this is going to change. So let's say you're trading two or 20K, which is 2 mini lots. A mini lot's 10K. 2 mini lots is 20K. So So if I took the same trade with 20K, that's $20, right? And so I look at my spreadsheet and go, oh, $20. Well, hey, if I have $100 in my account and make $20, I'm moving down the spreadsheet, right? Or moving down. Moving down is actually a good thing, right? Right. Moving down means we're making more money, right? Actually, it'd be kind of cool to turn it upside down and actually moving on up, right? Because I think our brain thinks that when we think going down, we think money is going down, feeling down. Down is bad. But in this case, down is a good thing. Going down the spreadsheet is a good thing. But if I made it in reverse, you can say, hey, I'm going up, almost like a thermometer. Or maybe if you ever had like a charity, you're raising money, raising cookies for, you're raising money for a band or orchestra, and you have a big thermometer, it's going up. Hey, we're raising more money, and the thermometer is going up, right? So you almost can do that, like a fundraising thing, right? And, if only in this case, if you lose money, you have to go down, right? See, here, if you lose money, you go up, and going up is not good. So that's a thought. I'll have my kid, my new kid, your brother, Krista, ChatGPT. It's the brother, your little brother. There's two Kristas in here. Krista, one, I know you're a twin, but is that Kira? Or you just logged in two different devices? Oh, no. Oh, this is 1 and 2. Okay, I get you. Okay, we got 15 minutes. We got the 9 o'clock candle. A lot of these algos, everyone's getting to algorithmic programming. Wow, I can program. Everybody's programming. Everybody's a programming genius now. That a lot of the algos are built on time, and so they're built on, and the candles are built on time. So you'll find a lot of volume coming in at 8 o'clock, and 9 o'clock, and 10 o'clock, and 11 o'clock, and noon. You'll find lunchtime. The bots are not even eating lunch, but they've been programmed by humans that humans eat food and stop trading, lower volume, stop trading, and then the volume just drops, and you're like going, like only 20% of Tokyo volume is actually human. It's been computers for years. But they have 2 lunch breaks. There's an early lunch and a late lunch, and the market slows down. That's probably what we've been experiencing. I completely forgot about that. Those slacks over there have 2 lunches. See, I'm big at international multicultural things. I like sushi. I like shawarma. I love foreign foods. But I like adopting other parts of the culture, like a siesta. Having, being paid to take a nap in the middle of the day. I think we should adopt stuff like that, or adopting like 2 lunches in Tokyo. Let's have a morning lunch and a later lunch on top of that, right? Not that I'm going to eat more food, but just maybe having a little bit of dessert later on, right? Sometimes I don't want to eat sweet foods right after I eat. I don't know if it's blood sugar or what, but people, when they bring me a dessert menu, hey, would you like some dessert? Like a bleh, right? But I tell you what, 3 or 4 hours later, I go, man, I wish I got that pie. So sometimes I'll get the dessert to go, knowing that I don't want it now, but 2 or 3 hours at home, I'm gonna have a little bit of those leftovers, and then a little piece of that dessert cake or whatever. Here we go. Okay. I tell you, gold was such a fun trade, guys. I mean, when we were trading gold last year, it was like a personal ATM. You turn the thing on, press the button and money comes out. And I'll show you a chart of how nice it was back in the day, right? Before I don't know what happened, the crash, the great crash of 2026. But man, it's like free money, free money, free money. What we're gonna do? Buy. We're gonna do buy. How about Tuesday? Buy. Wednesday? Buy. Thursday? Buy. Friday? Oh, buy. Monday? Buy. 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 And then we got into this shop, right? And then it was back buy, sell, buy, and then here was like, oh my goodness, this thing is gonna go to 6,000, right? I mean, you just threw an order on, and you're automatically, you take a 0.1 lot, and all of a sudden now you've got like $200. It's like magical. Then then this happened. Big long wick. And Jay Lee and me both got like whacked on that long wick up and down. And then the servers went down at the Chicago Board of Trade. And then, okay, try again. And then all this happened and then we got into all this shop where we are right now. And I think maybe we might be coming out of it. Maybe we have some of our predictive function there, but this is where we are right now. We need to get out of this Bermuda Triangle of price. This is the Bermuda Triangle here, right? Which is, see, we have buyers stepping in, but sellers are stepping in too. Buyers and sellers, buyers and sellers, buyers and sellers. Finally, we'll meet at a point when they'll either break to the north side or break to the south side. Oh, something went off. Ooh, the euro? Did we get stopped out again? Okay. 5-minute chart. Ooh, stop below the low. Where'd you go, Mr. Euro? Okay. More. How you like it? How you like it? More. Okay, and history. Oh, $1.80? I had $1.80 stop on there. Okay, that was the stop should have been down here. I guess because it got away, and I had my stop that tight. Yeah, I'm like going, did we go way down here? Okay. Anyway, guys, that's got to be it for me. There's no questions there, right? So I want to thank you so much for being here, and let me know. Post it. Go to the school page. We're going to be transitioning from Teams over to the school page. Lisa, I sent you an invite, and it might have been to the junk folder. Go ahead and accept that invite, and you'll be in here as well. So we can communicate here. You can message me here. Oh, James. We're missing James. Right? Steve says slow market, but always good learning. Yes. And hopefully if I wake up, we can do a little trading together. Okay. All right, guys. Krista, you go ahead and stay online. And I'm going to stop the stream. Oh, my goodness. I left the stream on all this time. You guys actually lucked out. You actually got to see an entire challenge from start to finish. I tell you what, you better watch it all, because I'm going to come back and clip this, baby, because you guys got some really good secrets and stuff that I never, ever share publicly outside of the challenge. So if you want to be part of our 50 to 50K challenge, click the link below.